When can you trade Forex? This is a tricky question because we have seen that one of the advantages of the Forex market is that it is open 24 hours per day, 5 days a week. Yes, it is true that the Forex market is open 24 hours a day, but that doesn't mean it's always active the whole day. You can make money trading when the market moves up, which is known as a long position. You can also make money when the currency pair moves down, which is known as a short position. But what about the times when the market is not moving at all? It would be very hard to make money when the market doesn't move. About this, there is a popular quote by the famous trader Jesse Livermore. There is a time to go long, there is a time to go short, and there is a time to go fishing. The meaning is that sometimes the best thing to do is doing nothing because the market is not moving much and it is not giving you any good opportunity to trade. So while it is true that the Forex market is open 24 hours a day, it is not always active throughout the day. Understanding when to trade and the different market sessions is crucial for successful trading in the Forex market. So let's have a look at what a 24-hour day in the Forex world looks like, so you will have a better idea of what I'm talking about. Here we have 24 hours starting from 6 a.m. to 6 a.m. of the next day. Traditionally, the market is separated into 4 sessions: the Sydney session, the Tokyo session, the London session, and the New York session. Please note that I'm using the GMT, the Greenwich Mean Time used in the UK, so it will be different if your country is in a different time zone. But don't worry, you can use this link www.forexmarkethours.com and set your time zone to check each session with the correct time for your location. You will also find this link in the attachments. So let's have a look at the chart. The London session starts from 8 a.m. and it ends at 5 p.m. The New York session goes from 1 p.m. to 10 p.m. The Sydney session from 10 p.m. to 7 a.m. and the Tokyo session from midnight to 9 a.m. Even if you learn these trading periods very well, I invite you to have a look at the link I provided to you, because during the months of September, October and March, April, some countries shift to or from the daylight savings time, so you may need to double check the trading sessions. Now you know how a 24-hour Forex day looks like, but in order to understand the best periods to trade, we need to have a closer look at each session. Let's start with the London session. Historically, London has been considered the Forex capital of the world, with thousands of transactions every single minute. About 30% of all Forex transactions happens during the London session, so it is a very important one. What should you know about it? First of all, due to the large amount of transactions that take place, the London trading session is normally the most volatile one, which means that prices are likely to fluctuate the most during this session. Then liquidity is also very high, which means that generally you have lower commissions to pay because the spread is narrower. We will talk about the spread later on in this course, but for now, remember that the lower the spread, the better. Finally, most news regarding the British pound and the euro is released during this session, which can increase volatility and liquidity, especially for these two currencies. Right about the time European traders are getting back from their lunch breaks, the US session begins. Here are some tips you should know about trading during the New York session. First of all, most economic reports for the United States are released near the start of the New York session, and they can have a huge impact on the dollar. You should know that about 85% of all trades worldwide involve the dollar, so whenever important US economic data is released, it creates large movements on the market. Then liquidity and volatility are quite large at the beginning of the New York session, but they tend to be lower during the second part of the session. After the New York session, we have the Sydney and the Tokyo sessions. First of all, volatility is usually very low. Then it is more likely that you will see stronger moves in Asia-Pacific currencies such as the Australian dollar, the New Zealand dollar, and the Japanese yen. Finally, liquidity tends to be lower, which means that you may pay higher commissions to trade because of a wider spread. Remember, high spread equals bad news for you. Now you have more information about each session. With all this information, let's try to answer the question, when to trade Forex. There are two factors to consider, volatility and liquidity. We want to trade when the market is making good movements and it is creating opportunities to make money, so we want to trade when there is high volatility. But we also want to trade when there are many transactions, so we have a lower spread, which translates to lower commissions. So we want to trade when there is large liquidity. Considering this, the best times to trade are during the first hours of the London session, let's say from 8 a.m. to 11 a.m., and when the London and the New York sessions are overlapping, that means from 1 p.m. to 5 p.m. This is absolutely the best time to trade, as you can take advantage of high liquidity and volatility, resulting in lower spreads and good potential for higher profits. Following, we have the rest of the New York session and the other part of the London session, so from 11 a.m. to 1 p.m. So, should you avoid trading outside of the London and New York session? Not necessarily. If you only have time to trade during the Sydney and the Tokyo sessions, go for it. You might have smaller movements, which means less opportunities to make money, but that doesn't mean you won't have any opportunity at all. The only trading period I strongly recommend to avoid is the one that goes between the last hour of the New York session and the 2 hours after the New York session. During this period, spreads tend to be wider and swap rates are calculated, which can impact trading decisions. We will cover swap rates later on in this course, but for beginners, it is best to avoid trading during this period. In conclusion, understanding market sessions and their impact on liquidity, volatility, and spreads is crucial if you want to be a successful trader in the Forex markets. By identifying the best times to trade, you can take advantage of opportunities and also avoid unnecessary risks. I have prepared a PDF for you about the different trading sessions. You will find it in the resources for this lecture. Feel free to download it and use it because it can be really helpful at the beginning of your trading journey.